Hello everyone, welcome to the Stock Market Outlook for the week of January 30th. Every week I go through the same process. We look at how indices are performing, how market health indicators are performing, recent watch list and trade performance, and which sectors are performing best. This is part of my overall trading process, the first step, which is looking at overall trading conditions, whether I even want to be trading or not. From there, we look at individual stocks, look for patterns and trade triggers within those. There are information in each of these articles if you click on these links. And as for this week, heading into January 30th, market conditions are good. I'm willing to take long positions this week, assuming everything stays favorable and I find setups that I like. Recent trades have been working well, seeing lots of great price action in individual stocks, and this provides good feedback that what I'm doing is working. The next step is looking at how indices have been doing, and I look at several different indices which look at different segments of the markets. We have technology stocks, large cap stocks. NYSE Composite probably our most comprehensive index because it's looking at such a wide array of stocks. All the stocks listed on the NYSE, so varying in size, industry. Great one for kind of what the average stock is doing. Russell 2000 looks at smaller companies. And if we look at this, I've discussed in prior videos that yes, it kind of matters what the long-term trend is, but when we're looking at a reversal, that reversal has to start somewhere. So even on these points here, we were looking at, is the market building higher swing highs, higher swing lows, and also the health indicators, which we're going to talk about next. And we can see here the price is dropping and makes a lower swing low, but then we make a higher swing high here, higher low. So these are times where we're willing to buy. A little bit of an indecision period here, which we had talked about, where it made a lower swing low, but then we shot right back up and we're making higher swing highs again. So right now, all these indices, in at least since the start of the year, we're moving up and we're making higher swing highs, higher swing lows. Really good to see. And if that continues to happen on the short term, then it starts to build over the long term as well, where we start taking out these prior highs on the S&P 500. We start taking out these highs on the Russell, these highs on the Russell. You can see the NYSE Composite is taking out highs going back to July or August, and so that's a really good sign that we're starting to potentially bottom out. And I don't know, I don't make long-term predictions. I don't really care about that. I just look at, are we making higher swing highs, higher swing lows? If we are, then I'm a buyer. NASDAQ, the only one that's a little bit more stuck here. You can see it's almost more like in a range, whipsawing up and down. Even that one in an uptrend, moving toward the high of that range in 2023, and we are pushing above it. So if we can start clearing above all these levels from late 2022, that would be a great sign. Canadian stocks doing pretty well. They've had moved above those July-August levels, and we're up into new high territories, at least for the last several months. Gold ripping, still good. Potentially some good trades out there in gold. Oil, people like to talk about it. It's not my trade choice at the moment. Oil pretty weak. This is growth stocks versus value stocks. It's almost going to mimic often the technology index because a lot of growth stocks are technology stocks. And just something interesting, I noticed that growth stocks really taken off recently, and we can see that in these indices, and mainly the technology index pretty weak coming in here, and we've had this strong surge through 2023. Nothing you have to do with that chart, but if you're into tracking value stocks versus growth stocks, then you can check that out. The S&P 500 analysis, we already talked about the price action. I do like this, that we had this pullback. We're continuing to build to the upside. These are market health indicators, which just help me assess the overall strength of the market. Price action, I really like following it. These can also help just confirm what we're seeing on the charts. Yes, this is the number of stocks above their 50-day moving average. The 50-day moving average is basically just a very simple and crude metric of whether a stock is in a short-term uptrend or not. 72% of the S&P 500 stocks are in a short-term uptrend or above their 50-day moving average. 74% of all U.S. stocks. So really good to see widespread stocks moving higher at the moment. And over time, when this is below 50, it's just going to be much harder to buy stocks. You're just not going to see sustained uptrends for very long, and you can see these periods. It just would have kept you out of the market, would have got you in for the rallies, kept you out for the down periods. Volume, not super important. We did have, and maybe we call it an intermediate follow-through day. Follow-through days are typically off major lows. We did have a short-term low here and a nice pop, 1%, 1.5% upside plus increasing volume, and we had that on this day, at least a few days after a bottom. So we had the bottoms over here, chopped sideways, and then we had a nice move up. So not really important, but still nice to see that follow through or that push to the upside on that day on volume with a nice big move. Anytime you see that coming out of a pullback, strong moves coming out of pullbacks are nice to see. This is the daily average movement of the S&P 500. Uptrends have loads of small movement days. You don't really get 2% drops or 2% upside days. It's usually, unless maybe you have a big news announcement or something, but it's usually like down 0.1%, up 0.2%, down 0.3%. Really small moves, and you can see when we get really big moves, when you have really volatile conditions, that's more bear market behavior. When you have these really big moves like you see in here, it's associated with downward markets or really whipsawing markets, which you probably don't want to be involved in. Here, same thing. Or if you like trading this, you want to be going short most often. Then you have these periods where it settles down a little bit. That's the uptrending periods. Right now you can see we're starting to get a lot quieter in here than what we have been. Still a little volatile, but a lot better than it has been. Going back from here, you can just see it's like over this last several months has been quieting down a little bit, and that's what we want to see. That's more indicative of uptrending behavior. So this one also good. We haven't had any 2% downside days. 2% downside days are, you're not going to know when it's coming, but after it's happened, you're generally going to want to avoid the market for a little while. If you look at all these 2% downside days, you really miss nothing by staying out the next few days. This might have been the only one where it had a nice pop right after. You go through all these other ones, and usually, maybe it goes up for a day or so, and then you have this sideways, choppy conditions, or the price continues to go lower. So it's generally better just to step aside for a little bit when you have these really big single day drops. NYSE advanced decline line, this one, positive divergence on it. NYSE advanced decline line is how many stocks are advancing versus declining as a cumulative total. Positive divergence, we can see this broke above its December high a couple weeks ago. And we talked about it in prior videos, and I said that's bullish because quite often the statistic is very high. Of course, these are happening all the time, so I haven't run the statistics in. We'll see what this one runs. But it's pretty close to a 90% when you get these positive divergences that the S&P 500 will follow through and make a new high of its own. So this cleared its December high. So back in this area here, like early January, it became quite evident that or at least there was a high probability, close to 90%, that the S&P 500 would also make its new high, or clear above its December high. So we're getting to that point now. We're getting very close. I would consider this a fulfilled signal. If we move up pretty much anything, we'll have got to that prior high. What it does after that, I don't care. It's just this was a positive sign back here. We've basically fulfilled that objective, and now it's just, can the market continue making higher swing highs, higher swing lows? Do the health indicators stay strong? That tells me whether I want to be involved. I don't make predictions about what the future holds. I just look at what current conditions are and whether I want to be trading. So right now conditions are good based on all of these, and we're seeing price moving up, so I'm buying. This is total volume, or upside volume versus total volume. 90% upside days are what we like to see. We haven't had any 90% upside days in a while, but we did have some early in the rally, which was good to see. Sectors on the move. Been mixing it up a little bit here. If we go back to the historic conditions down here, which is basically what's the summary of what's said each week, we had basic materials, industrials, financials, and healthcare. Just pretty much every week they were the really strong ones. Basic materials still up there. It wasn't as a strong performer in the last week, but it's still up there in the upper half on the 1 month performance. Still doing top performance on the 3 months, but we are starting to see some of these other ones, and I've talked about these in prior videos. Technology would have a really strong week, but it was still like just decimated on the 3 month and the 1 month. And now we're starting to see these consumer cyclicals, communication services, technology, real estate, financials still also hanging in there. But these ones in the middle here have been making a surge, and you can see they're pretty much in the upper half of all of these now. So consumer cyclicals, technology, real estate in the upper half. What other one do we have? Communication services. Yeah, so they're all in the upper half this week. Most of them in the upper half on the 1 month, and in the upper half, consumer cyclicals maybe just below the upper half in communication services, but they've been making a really strong surge. Like there's not a whole lot of difference. Basic materials is, the strongest one over the last 3 months, but all these other ones are very closely packed. So these are all acting very well. And what do you do with all this information? Well, you don't have to do anything. You can run your scan, find the strongest stocks that you like that have the patterns you trade, and you trade them. This is more for if you want to really narrow down your scanning and your scanning time. Instead of having to look through 150 stocks, maybe you say, well, I only have time to go through a few tonight. I'm going to go through consumer cyclicals and technology. They've been really strong. So you put in an extra filter, say only show me technology and consumer cyclicals, and now you only have 30 stocks to go through, and you're looking at really strong stocks and strong sectors. So that's how you could potentially use this. There's also an article here, how to scan for the strongest stocks and the strongest sector. It gives you a little bit more on how to use sectors. What else am I doing, or what am I doing this week? Well, I'm going to be buying. I like the market at the moment, and until something changes, I'll take trade setups I like. I'm also always day trading, and check out the price action stock day trading course. If you're into stocks, you can check out the Euro USD day trading course if you're into Forex. And what I like about day trading is that you get trades every day, no matter what the market's doing. There's opportunity out there. With swing trading, it's a little bit more of a cyclical type of trading. You can see back here we had poor conditions where wouldn't be taking no long swing trades, and then we get into a buying phase here. So it's kind of this process of we have months where we might be really active, and then we have a couple months where it's a little slower or we're not taking trades. And with day trading, I don't have that, so it's more of a consistent income, and then swing trading's the cherry on top. So depending on your time, day trading does take up a bit more time, but it is that's just my process each week. I day trade a little bit each day, and then when swing trading is good, I am actively involved in that as well. So I hope you have a great week out there. Until next time, happy